If you want to buy a home as a first-timer, you might be intimidated by what's involved. Finding a real estate agent and then the right home in your price range, getting pre-approved for a mortgage, and potentially facing a bidding war. And that's just the beginning. If you're looking in a high-cost market like one of California's major metro areas, Honolulu or New York City, you might find it even more challenging. President Donald Trump offered emergency price relief to home buyers at the start of his term. But so far, he's offered few specifics on how he would deliver that. But existing programs can help some first-time home buyers, especially people below certain income thresholds. And there are other strategies available that could help your dream become reality, even in a high-cost housing market. The first thing potential home buyers should know is what they can afford. Who wants to window shop only to realize a dream home is out of their league? You can find a mortgage broker through a real estate agent, but you can also start with a loan officer and get your pre-approval first. Check with banks, but also credit unions, which may offer lower origination fees. And don't forget to shop around, as different lenders may offer different interest rates. Most people believe that a down payment amount of 20% of a home's sales price is the norm. But especially in high-cost markets, you may need to put down less. In fact, in 2024, the typical amount that a first-time home buyer put down was 9%, according to the National Association of Realtors. What are the options? The government offers mortgages backed by the Federal Housing Administration, which requires a 3.5% down payment for buyers who qualify. And these can be first-timers or repeat buyers. Mortgages backed by the U.S. Department of Veteran Affairs are typically offered to active duty service members or veterans and require no down payment. For other buyers, as you shop around, ask your lender the minimum amount you can put down for the loan and discuss what your monthly payment would look like with a lower down payment. Buyers in expensive markets may need to take out a jumbo loan, which is a loan that exceeds guidelines set by the FHA. In 2025, this amount was about $800,000. Jumbo loans typically come with down payments of at least 10% and sometimes as much as 25 or 30%. But there's a downside to putting down less than 20% on a home. A down payment under 20% requires you to pay additional money each month in the form of mortgage insurance, called PMI for conventional loans. But you could always eliminate that down the road if you refinance or get an appraisal that shows that your home increased in value. Talk to a lender about your options, especially if you have the ability to plan ahead. Also ask about potential grant programs for first-time home buyers in your area. For example, New York City, one of the country's most expensive markets, offers first-time home buyers up to $100,000 toward a down payment or closing costs. The program only accepts applicants with incomes of up to around $87,000 for an individual, or about $124,000 for a family of 4. California, another high-price market, offers loans to first-time home buyers that can be used towards a down payment and/or closing costs. The agency offers below-market rates and works with approved private lenders to qualify buyers and make the loans. Another option is a Bank of America program that offers a 3% down payment and a competitive rate. This program is also income restricted. The bank says loans of up to just over $800,000 are possible with a 3% down payment and as much as $1.2 million with a 5% down payment in high-cost areas. But make sure to do your research because loan limits can vary based on location. Buyers across the country are still facing high home prices and mortgage rates that, while they have fallen somewhat, they're higher than many people would like. Especially if you're looking in a high-cost market, talk to local lenders and real estate agents to assemble a team that you trust and ask them for advice to fit your specific situation. And if you want more content like this from MarketWatch and the Explainomics playlist, please subscribe and keep checking back for new videos. And we'll see you next time.